Will the stock market crash in 2025? That's the question everyone's asking, on YouTube, in finance blogs, even in everyday conversation. And if you're a beginner investor, it can feel overwhelming. You might have just started investing. Maybe you've built a small portfolio through an app like Robinhood or Fidelity, and suddenly, every headline is warning about crashes, corrections, and economic chaos. But before you make a move, there's one truth you need to hear. Market crashes are not something to fear. They were something to understand. Because if you approach them with the right strategy, they can actually help you build wealth faster than bull markets ever could. Let's begin with what's happening right now. The financial world was rocked recently when Donald Trump, now heavily involved in private investment diplomacy, announced a $600 billion deal with Saudi Arabia. According to sources like Reuters and CNBC, this could expand to over $3 trillion in investments focused on U.S. infrastructure, energy, and defense. Simultaneously, a temporary ceasefire between India and Pakistan was brokered, and tariffs between the U.S. and China were significantly reduced. These are massive geopolitical developments that usually boost investor confidence, and they did. The stock market rallied. The Dow gained over 700 points in a single day. But still, fear lingers. And that's because while the headlines change fast, emotions are much slower to adapt. Now let's move to the core of the issue. What do the numbers say? Despite positive global headlines, there are some concerns. Inflation is still hovering above 3%, and the Fed's decision to keep interest rates above 5% has stalled growth in real estate and consumer lending. But it's not all doom and gloom. Unemployment is steady at 4.1%. Wages are up in sectors like tech, defense, and AI, and GDP is still growing, albeit slowly. According to the Wall Street Journal, we're not in a recession, but in a phase economists call stagflation light. Slower growth, but without major job losses. That's a big difference. The average consumer might feel squeezed, but the economy as a whole, it's not crashing, it's adjusting. Now let's break something down that most beginners miss. What does a stock market crash actually mean? It's not just a dip. A crash is a rapid decline of 20% or more across major indices like the S&P 500 or the NASDAQ. But here's the kicker. Since 1950, we've had more than 30 market corrections and nearly 10 bear markets. And every single time, the market recovered. Think about that. Not once has the market failed to come back, usually stronger than before. The 2008 crisis? It was brutal, but by 2013, the S&P 500 was hitting new highs. The COVID crash of March 2020, down 34% in weeks. But within 6 months, the market had fully rebounded. As a beginner investor, you must understand this. Market crashes are temporary, growth is permanent. Let's bring in Warren Buffett, one of the most respected investors of all time. At his 2025 shareholder meeting, Buffett made it clear. There is far more opportunity in the stock market than in real estate. And that's coming from a man who owns both. His logic? Real estate is slow, expensive to liquidate, and choked by high mortgage rates. Stocks, on the other hand, are flexible, fast, and full of companies innovating at lightning speed. When Buffett makes moves, smart investors pay attention. He's not selling, he's buying. So ask yourself, if Buffett sees opportunity, why are you scared? Let's talk history. Beginners often overlook just how resilient the market is. In 1973, stocks dropped 48% due to the oil crisis. In 1987, Black Monday wiped out 22% in one day. In 2000, the dot-com bubble burst. And in 2008, banks collapsed. But every time, the investors who stayed consistent and kept buying came out ahead. In fact, some of the biggest fortunes in history were built during crashes, because that's when assets are cheapest, competition is scared, and long-term thinkers go shopping. If you can shift your mindset to see crashes as buying seasons, you'll already be ahead of 90% of the market. Let's make this practical. If you're just getting started, here's what to do. First, keep investing no matter what. Use dollar-cost averaging, which means putting in a set amount every month, regardless of whether the market is up or down. This smooths out volatility and ensures you're always building. Second, Don't put money into the market that you need in the next 12 to 24 months. That's what your emergency fund is for. Ideally, 3 to 6 months of expenses in a high-yield savings account. Third, build your core portfolio around low-cost index funds, VOO, VTI, or even diversified ETFs like SCHD. These give you exposure to hundreds of stocks with minimal risk. And finally, don't overreact. The worst thing a beginner can do is sell during a dip. History proves that most recoveries happen when people are sitting on the sidelines. Now let's address a big fear. What if I invest now and then the crash happens tomorrow? That's valid. But here's the truth. No one knows when crashes will happen. Not Buffett, not the Fed, not the smartest analyst on Wall Street. But we do know that historically, the best days in the market tend to follow the worst. And if you miss just a few of those big up days, your long-term returns drop dramatically. So instead of trying to time the market, focus on time in the market. That's where real wealth is built. And if you're still on the fence, ask yourself this: why are you investing in the first place? If it's for long-term goals, retirement, a house, your child's education, then short-term crashes are just noise. Your job isn't to guess the future. It's to create a system, automate it, and stick to it for 5, 10, 20 years. That's how millionaires are made. Not through prediction, but through consistency. So, will the stock market crash in 2025? Maybe, maybe not. But the better question is, what will you do if it does? Will you panic, or will you prepare? Because in the end, the market always recovers. But not everyone who panics does. The choice is yours. If you got value from this video, hit the like button to help it reach more people. Subscribe to the Cash Chapter for more smart investing videos like this. And let me know in the comments, are you investing right now or waiting on the sidelines? We reply to every comment. Keep learning, stay calm, and let's build long-term wealth together.